We're looking at the top 6 rare earth element exposed companies on the ASX over the last month. We're going to see a 64% gain in the leaders, some of them 20, some of them 40. And we're also going to have a look at a few other aspects to understand where the rare earth element gains are coming from. We'll also jump over to the charts to understand how they're moving. This is Final Market Points, where we connect the leading market themes and the top performing companies for better trading. You can like the video to support the channel, click subscribe for updates, and comment below to let us know how you scan and keep on top of the leading themes. Now we have a look at rare earth element companies on the ASX. A lot of people start off by asking what is a rare earth element. So we went to the Canadian government and the Australian government to see what their definitions are. Now, rare earth elements from the Canadian government say they're 15 elements referred to as the lanthanide series on the periodic table. And then we've got the list here supplied by the Australian government of these metals. We're not going to go through the phonetics of each of these. We'll leave that up to those who study the periodic table and the geologist specialists. But we also then have a look at the key facts. Some key facts, this is from the Canadian government, but manufacturing the magnets is a difficult aspect. So mining them, digging them out of the ground is a specialty in itself, and then also turning them into a refined commodity or a refined product that can be used in production is a different aspect as well. So China is the world's largest producer with an estimated 140,000 tonnes of rare earth elements in 2020, and that accounts for about 60% of the global production. So without China, we're not getting our smartphones and the other products that we'll touch on in a second. Many countries, including Canada, have the rare earth element resources, like Australia, but producing the elements that requires that complex separation and refining process that most don't have, and that's where China steps in and has ramped up. So what we do know is that the uses for the rare earth elements, we have many things, but whether it goes from clean energy, aerospace, cars, electric vehicles, defense, and electronics that most of us will use on a daily basis. Now, manufacturing these magnets is the single largest, most important end use of rare earth elements, and that's 29% of the forecast demand in 2020, and that's only expected to increase as the years go on. We are already beyond that. So having a look at this table here, we understand that there are magnets, catalysts, polishing, and other uses, mineralogical, batteries. Now, batteries continues to grow as we see EV ramp up, but there's many uses there, and the demand for them is only growing. So that's part of the reason why on the ASX we see them move so rapidly. Now, they're also referred to as somewhat green. We do know that it's a bit odd in the sense that they're mining and digging them out of the ground, but they're used in green products. So in a sense, some people think of them as a green metal or green mining. Odd in a way. Now, from the international context, who does what and who contributes, how has it been contributed to the world markets? So China is the world's largest producer. That's about 60% of the global annual production. And if we have a look down the table, so there's almost 60%, the US 15.6. Now, up until the early or mid-early 90s, the US was apparently number one. And then China really stepped into gear, ramped up over the last 30 years, and they've stepped into number one. But you've got Myanmar, Australia at number 4. Australian government puts us at number 5. So it depends on how they weigh in on these amounts as to where our rankings sit. So then we'll move over to, so they mentioned Lynas rare earths here, starting the commercial production, which has changed the weightings. But we also have, before that, we've got the Australian numbers here. So we'll bring this on screen here. Rare earth elements for 2018, we can see that Australia ranked ourselves at number 4. This is really before Lynas kicked in, ramped up. So that's how Australia, or the CSIRO, would put those numbers together. And then we look at the map of Australia to see where we're going to find rare earth elements. Remember, all the way back here, up here, we're looking at a fair mix, 15 different metals, elements. So on the map, it's all over the country, but there's a lot that comes out sort of the north and west side of things, a bit in Queensland that we see. Now, rare earth production from China against the rest of the world. Having here, we can see that the rest of the world really ramped up 2016, 2017, really kicked into gear. Now, some will put that down to Lynas really ramping up as well, but they're not the only producer in the world, although there are not too many that produce as much. Then we've got China up here, nice and steady. So if we extend this out, if we were to go back a couple of decades, we're going to see that China was below the US and much lower 30 odd years ago, but 30 years of consistently working on it, they have improved and increased to be a dominant force. Now, if we have a look at the top 6, we're going to do that in a second and have a look at their charts. What we look at from a theme progression, and we do this with Gary Glover on Tuesdays and especially on and Fridays reports, is we drill down into two aspects called both the Launchpad and Delta 6. Now, this is actually the Delta 6 report here, and the rare earths came in at number 10 on Friday's close. So if we ranked all of the themes on the ASX, and there's hundreds of them, to see which ones rank the best. Now, Delta 6 is a very short-term indicator. It tells us there's a lot of changing and movement within that space. On Friday, we saw a lot of movement within the rare earth space. So there was a lot of shuffling, a lot of moving around, and we'll see on the share prices in a second how and why on the charts. They were also in the Launchpad, so they've been in there for a couple of weeks now. They're number 4 at the moment. On Friday's close, they were number 4, ranked as the best in the Launchpad, and we'll have a look on the charts to see why. So probably a good time to move over. We've broken it down into performances, the top 6 performances, and then by performance, which is this one, and then top 6 by market capitalization, which is these ones here. So we'll start off with the performance-wise, and then we'll move to the names that everybody knows. Number 6, ALK, which is a name a lot know in the group, just shy of 20% return. What we're seeing here is this is a good strong move on Friday. That's why we see these Delta 6. They show us a quick flick up. If it's across the boards in the group, they come up ranked highly on Delta 6. So we see a good move. What we saw is this pop. They broke over a swing high 19-20 July. So they had the high, came back, fell down a bit. That volume, we want to zoom in and get away from that big bar on the down day. So this down day here, that big volume bar. Let's zoom in so we get away from it. Here we go. Right, that's what we're after. So the rally up here, but it's a big volume day down. So selling pressure, opens high, closes low. Then the selling dries up. See how the volume gets light in these 3 days. It doesn't really go anywhere. Just these are inside days, 1, 2, 3. And then the fourth one actually pops out towards the end of the day, closes on its high, and does it with higher volume than it's had for the last 3 days. That's your positive sign. That's where it's breaking the swing high. Is it breaking? It's closing right on the swing high, and then it breaks through it. After it breaks through that swing high, this candle here, it then comes up to the 50-day moving average, the green line, and then it shimmies sideways. So then we have this kind of congestion. So it spends 4 days getting up and then spends 2 days trying to get down and doesn't really do it, and does it with a bit of volume, but then turns around. That's where the Friday close was. That's what we're getting with the Delta 6. Something's happened here. There's a bit of turn. We move up from ALK, we're going to go Iconic Rare Earths. Wonder what they do. This one's not a rare earth element. Iconic Rare Earths, there you go. So they've had a similar sort of movement 2-3 days earlier. Come up to the highs, shimmied sideways, stayed on top of the swing high, constructive movement. And we've got 0, 1, 2, 3 high lows. And look, here they are, breaking swing highs with gusto, decent volume, and then possibly maintaining this under the 200-day moving average. That hot wet blanket that's been referred to, getting over that is a critical aspect, but normally what can happen is a bit of a pause on the 200-day moving average, sideways churn, and then can pop up. So we like to trade above the 200-day where we can, definitely above the 50. IXR, moving to Greenland at GGG, 23% return for the month, seeing same sort of thing. Rally, now this congests and pulls back a bit lower, doesn't push up higher like the other ones, and we're seeing the volume here is a bit sporadic. It's a bit concerning how it comes in ebbs and flows, and does have sort of congested volume here, but then we are seeing constructive volume on the up days. Positive to see, but it can be a bit whippy. ARR, American Rare Earths, 29% for the month. Looking at that, so it's sitting under these swing highs, has got a higher low, second higher low, third higher low possibly, and then comes up here with volume. This volume out here shows there's not a huge amount of accumulation happening, neither a lot of selling. So a lighter, look at share price under 30 cents, lighter trading throughout this, but it is a rare earth exposure and does show that there's strength in the theme, and that's why it's ranking highly in Delta 6 on Friday's close. Move on up, we've got DRE, Dreadnought, 48% over the month. Looking at that chart, zoom out to have a look. We've had this sideways, look at this. Throughout the market drop, January, February, March, April, it didn't really move too far. It sort of maintained this congestion. Red line, 200-day moving average moving higher and higher. And then congested with a couple of, look at this, there's a spring right there. If you haven't covered Wyckoff Springs, there's a tutorial, we cover that in detail. There, touches it, inability to close lower, and then goes back up. Tries to retest, has closed for 2 days, reopens, viable gap up with a good strong volume on that day. Retest, doesn't get there, and then bang, off it goes. DRE, top performer in the rare earth element space over the last month is PEK Rare Earth, 64%. This did get sold down with the rest of the market, 80 cents down to 30 cents. We see a bit of volume changing hands right on these lows, and then we do see it flick on up, rally. So we've got ourselves a higher low. This can actually be, it's almost, but not quite there, a high and tight flag. Not quite 100% rally. Some look for a 75% rally in the flagpole. Tight congestion within the top third, definitely above the top half of this recent rally range. So we go from the low to the recent high, cut it in half. As long as you stay above it and congest, then you have a bit of a flag, that high, tight flag, congesting, and then ideally we want to see a volume breakout, which is only going to be this day here. That confirms that we're breaking out of the high and tight flag. If it is a high and tight flag, and that meets your measurement rule, then we're looking to add this height of the flagpole, 75% of that on this breakout level about here. So what's that, 48 cents, 53 from 30, so let's say it's 42, 45 cents maybe to break out from there. So the profit target could be up towards 90 cents, 80, 90 cents up here. So there's overhead resistance there. That'd be a decent point to be looking at selling if this high tight flag does get the wind in its sails. Looking at them from a market capitalization perspective, we're going to have a look at the big names, because when most people look at rare earths on Australian markets, they look at Lynas. So we'll start off with LYC, bring that chart over here. 15% gain for the month, 20% gain for the year. Making that sideways movement, quite whippy. Similar thing, look at this, it's coming back on these old highs, it's finding support, it's retested this area, which sat on this high, had some highs, rolled back down, comes back into this zone, into the range of this candle here. Test, bounce, test again, bounce, and then comes back, undercuts these lows as the market's getting hammered. The market's getting hammered about here, June. So it's rolled over about 2 weeks later, gets hit, big strong volumes down on the low. And this is a spring right here. It comes down, test down for a day, 1, 2 days. Inability to close lower right here. The bears are losing control. It's shortening of thrust. It's lost its momentum, and then it pops up. That says, okay, it's unable to close lower. There's demand around these levels. The volume's very high, and then it just keeps on pushing north. So that's been LYC over the last month. Then we have a look at ASM. They've got 17% gain for the month, following a similar sort of pattern down, pushed heavily, and finds its lows mid-July as opposed to mid-June, which most of the market found back here with these high volume turnovers. And then they've started to turn the corner. But percentage-wise, we're moving from $2.80 to $4, big percentage movements there. Then we'll have a look at ALK, which we already did just earlier. So then looking at that for parallel against the large market capitalizations. And ARU, ARU, getting dropped down here. So large capitalization coming back to the 200-day moving average with some news. And then we have Hastings, HAS, only 7% for the month. Let's get that. There we go. So they've rounded a bit of a bottom here. They fell down with the rest of the market, hitting a low around here, 23rd of June. And then look at this consolidation. Look at that volatility compression. So look at these ranges really tightening up. What we want to see is like an inside day, sort of 3-4 times if we can. There's 1, 2 inside days, and then pops up. And that really gets going. So 2 inside days is kind of all it took there. Bit of congestion, gave the ability, closed above the swing high and stepped into gear. Hasn't rallied really hard, but has moved a bit with the rest of the group. Last one, Dreadnought, that we looked at before. We'll put these in market capitalization, and we'll quickly scroll out to have a look at how they move together. Comparing these charts over the same time frame, we wanted to see sort of similar highs, similar lows, but what we really want to see is the correlation sort of increase throughout this period. That tells us that there's investment being deployed here and that market is turning. So a bit of a deployment there. Same sort of thing. We're seeing the flick up in the last couple of months. It doesn't hurt that the rest of the market has done it as well. But ideally, we want to see similar patterns. So we're not seeing that in the large caps right now. And if we compare the ones that have performed the best, if we can see similar patterns, ideally we want to see VCPs and the like, then we're going to have a better run on our hands, a bit like lithium and uranium have done over the last couple of years. So we're not seeing that huge movement. We've seen the pop on Friday's close. We are seeing that movement, but we want to see that sort of similarity within performances. So there we go, looking at the top 6. We'll come back again tomorrow with Gary's report for his weekly portfolio updates. Friday, we then have a look at the high velocity, the Delta 6, and the top momentum leaders on the ASX, which is where part of this data comes from, which filters down to find the leading themes. And then we come back again next week with leading themes.